Okay, right. So this is part 2 of chapter 5, and this is actually looking at this question of amortization, right, of intangible fixed assets or non-current assets, and it's exactly how we deal with depreciation, right? So the question is there a useful economic life that we can see? Then we do it as normal, as we've always done with depreciation. But if we don't have one, we need to look annually for impairment. Right, and so it's pretty much debit the expense in the statement of profit and loss, so E, and credit this accumulated amortization in the statement of financial position. Right, so let's look at an example, which is why I said we should keep this. We should wait until we should separate the two and not do it all at once. So this is the second example in the workbook, and it says that Chardonnay Limited buys 2 brands on the 30th of June. Always watch out for the dates. So you can look at the year end here. The year end is the 31st of December. So if they bought this on the 30th of June, you're thinking, I only want to be doing this for 6 months, right? I only want to be depreciating or amortizing for 6 months. As in, I only want 6 months to go through my statement of profit or loss. Right. So you have here the first one, the brand name A, and they tell you that's the cost. So if that's what you bought, you recognize it as you would debit 100,000, your brand, and you credit bank or however you've paid for it, no problem. Now, in terms of how we treat this in terms of amortization, well, they tell us the useful life is 10 years, so that means that each year is 10,000, right? 100,000 divided by 10 is 10,000. That's for a whole year. But we want 6 months. So 6 months is half of that. So that's 5,000. So really we're doing debit amortization, 5,000, credit accumulated. Accumulated amortization. That's what we're doing, 5,000. So that's where we are. So that's that one. So always look out for the year and when you buy this thing, right? And we're just dealing with adjustments. This is an adjustment, nothing special. Let's look at this one. It says that you paid 500,000 for it. Same thing, debit 500. So because these are brands, these are external to you. You've bought them. They are intangible straight away. You're not internally generating it, right? We'll come to this matter of internally generating or internally. Once you're internally doing something, you need to start looking at research and development, right? And where, and then look at that acronym of sector to determine whether or not you have satisfied all the requirements to be able to recognize it as a non-current asset, as an intangible. So it says here that this is 500,000, so you recognize debit, and let's just scroll down a little. So you would have debited the asset, intangible asset, with 500,000, and you would have credited bank 500,000. The question now is, how do you amortize this? Because it says it's indefinite, which is possible, because we're talking about intangible assets. You would have to carry out an annual review every year. Every year you'll look to see if this thing is still worth 500,000. So if it's worth 400,000, you would, if you like, debit income statement expense 100, credit the intangible 100. So this brings it down to 400, for example, if it was an impairment. So that's what we're trying to say. Every year you look for any fall in value in the asset. So let's look at the last one. It says Chardonnay has internally generated a new brand. Okay, it's estimated that this costs 400,000 in staff costs. So this is still all research. So staff costs are research costs, and you haven't quite hit development yet. You will see, especially at level 4, very clear indication of development via the term sector. And when you've hit sector, you will know that you can start capitalizing events. So it has to follow this pattern of research and development for us to capitalize. So all of this 400,000 really just is an expense, literally just debit expense and credit bank. And that's how we deal with this one, right? So that's how we deal with, so we've looked at, let's just go back. We've looked at research and development when we recognize intangibles, right? And we've also, I think it's also good to know the the name. So it's IAS 38. I think it's good practice to know what standard you're dealing with. There are not many you should be comfortable with their names. So IAS 38 looks at the standard of intangibles and how we deal with it. And that's it. So again, let's look at what questions you should be practicing. You should be looking at, here we are, question 20, 52, and 53, please, in the exam kit. Okay, great stuff. Thank you.